Hello, good evening, everyone. Good to see every one of you here. My name is Alex from MarketWise Asia. Good to see every one of you here once again. And if you can hear me loud and clear, please say a hi to me in the comments. I've already seen quite a number of likes in the comment already. Hello, Vico. Hello, BK. Hello, Gary. Hello, Jinping, Han Hock, Edmund, Mary, Mike, James, Danny, Yen Yap, Jing, good to see every one of you here. All right, if you can hear me loud and clear, please just type a yes in the comment. All right, Amanda, MH, Henry, good to see every one of you. It seems that I have not spoken to you guys, I think, for quite a while, one-to-one. Basically, I think the previous one, I think 2 weeks ago, I was with Terrence and Colleen. And I think last week I was with Jay. So I have with the special guest, right? So this is the first time, I think, in 2 weeks that I'm talking to you guys, one-to-one, okay? And normally I don't do my Facebook Live on a Thursday evening because I know that, most of you guys need to go to work the next day. So I tend to do Wednesday or Friday, but Wednesday I'm not very free, and Friday I need to prepare for my summit this coming weekend. Okay, so I decided to do today, Thursday, and I just try to do a quick one. All right, so first thing first, okay, whatever I say today, all right, a disclaimer first, okay? Whatever I say today, it is just for educational and informational purpose. It is not a recommendation to tell you what to buy or sell, and of course, not financial advice, okay? So please do your own due diligence and just treat Alex as an entertainer, okay? Whatever I say is just for fun, and don't copy me. Alex is always wrong. All right, so today's main topic, I wanted to talk about, how to trail your profit, how to take your profit systematically. So if you have read the title on the Facebook feed, right, I mentioned this on how to enter a position and now you're in a profit, how to exit and take profit systematically. And for example, if you want to hold on to your trade a bit longer and see if you can squeeze out more profit, right, how to do that. And I will show you a very simple method where you could trail your stop loss effectively and exit with no guesswork. That was the main thing that I want to talk about today. But suddenly today have a relatively big sell-off, a market correction. So maybe I want to go into that to do a broad market update and also crypto as well if I have the time. So the stock market is the first priority. Crypto, I will see if I have the time. Okay, so Christine, Alan, Doi, SK, good to see every one of you. Jess, Swatha, Cheryl, all right, good to see everyone. So yeah, first thing first, okay? So I want to share with you that the Market Insights Virtual Summit, it is coming, all right, this weekend, Saturday and Sunday is just 2 days away only. If you haven't registered, please register for it, okay? This is proudly sponsored by IG. We have quite a number of good speakers, exciting ones. Michael Covell, the best-selling author of Trend Following, and Tom Basso, the original market wizards. They are doing a fireside chat, and of course we have Boris Schlossberg and Corinne Sell and quite a number of other resident experts and also new speakers as well. So let me go through this program just for a quick one in case you are new to MarketWise Asia and didn't know about this event. And try to zoom in over here. All right, so just a quick one. All right, Colin Sell will be talking about how to profit from the commodities super cycle. Jim Wong will be talking about the broad market update, the potential market opportunities and the risk in the second quarter 2021. Ka Yong, a new speaker for this time around, is to how to pick profitable stocks using predictable recurring patterns that has more than 80% reliability factor. And I've seen his slides already. So this is pretty interesting. You might want to go and check it out, this session also. And of course, we have the keynote speakers over here, Michael Cobell, Tom Basso. They'll be doing a fireside chat, okay? So Michael Cobell will be interviewing Tom, and he'll share with you, how he do his trend following and how he manage his hedge fund and such. And recently, they published this book called The Trend Following Mindset, and we have quite a numbers of copies over here. So we decided to give these copies away. There are quite a number of copies now, okay? So it is autographed as well. It is autographed as well. So all you have to do is just to register for this event, and you stand a chance to win this book. Okay, so initially we thought, you need to share the event, then you get to, to win the book. But now I think that we have quite a number of copies. So we just decided that, if you just register for the event, attend the session, and you stand a chance to win. So, it is very easy. Just register and attend the session, and you stand a chance to win. Okay. All right. So, yeah, we have quite a number of books to give away. All right. So, Terence Tan, we have, if talking about the options. So, a systematic approach to 24 hours explosive profits with corporate earnings. And for Sunday Wise, Boris, a renowned FX expert, will show you how to trade the trend the easy way. And Terence Tan from IG will show you how to spot trading opportunities and trade them using knockouts. Knockouts is a very unique product that's available in IG, a CFD provider. And it's something a bit like options, but it's not options. And you have also a very well-defined risk. So I'll let Terence explain to you how to trade knockouts. Also a pretty interesting kind of instrument also. And Caden, we're talking about how you can beat the most professional fund manager regardless of market direction. So he'll talk about ETF and such, and how you can use ETF to beat most of the professional fund managers out there. And the new speakers for this session also, Wong Kong Hao. All right, we're talking about more of the macro aspect. When will the Fed bow down to inflation? And Jason Chew, speakers from Malaysia. All right, he'll show you how to handle volatility in cryptocurrency markets. This, I think, will be quite interest for a lot of you guys also. So I will share with you the link in the comments. Just register for this event and you are good to go. And once you register for this event, okay, let me go through this. Go to the home page over here. All right, register. All right, fill in your details, name and mobile, good to go. And please check your email in case the email landed in your spam box. Okay, I have very important information to send to you, how to access the webinars through the Zoom session and such, and a reminder. So remember to check your email. And from Alex from MarketWise Asia. Okay, so let's go to the session for today. So let's go through the broad market first. Oh, by the way, right? How many of you here are actually new to my Facebook Live or relatively new to MarketWise Asia? And if this is the first time you are joining my session, right? Please type number 1 in the comment so that I know you are new to me and I'm going to give you a warm welcome. Okay, don't be shy, engage with me. Give me a like, share, or comments, and I will only see there's only about 26 like only. So once again, all right, if I could just ask you to give me a like, okay? Liking is free, and it also tells me that you want to engage with me and to tell us Facebook algorithm that you want to see more of my Facebook Live in the future. Because if you don't do that, Facebook will deem that you are not interested in my content, and subsequently, Facebook will show you lesser and lesser of our Facebook Live on your Facebook feed. All right, hi Vicky, hello Eddie, hello Vincent, good to see you. All right, so yeah, remember just to give me a like. Liking is free, doesn't cost you money. All right, so at any point in time you think that I'm giving you value from this Facebook Live, also do remember to give me a like also. All right, so let's go to the market right now. Hello Derek, first time seeing you also. Okay, so let's see. Let me try to refresh this first. I try to keep this Facebook Live within 1 hour if I could, okay? If I could. All right, so today you can see over here a sea of red. Most of them are red, right? So this is a correction today. And the Dow is down negative 0.83. Nasdaq is down about 1%, and S&P it is down 0.94. Actually, it's not that bad compared as when it was the open just now at about at 9:30. So the market actually recovered a bit. Okay, so let me go through this. All right, go to the trading view first. Okay, I want to go through the also called the in a way it's a market breadth to see how the market, the broad market is performing compared to just the big three indices like the DJI, the S&P, and the Nasdaq. I mentioned this once before. All right, I saw you, Guo Feng Rui. Okay, yeah. Okay, thank you for joining me again. So yeah, I want to show you this thing called the ADD. right? I mentioned once in my Facebook Live before. So if you are using TradingView, right, this ticker is called ADD. All right, basically this is using the advanced minus the declining issue, basically to see how many stocks are advancing versus the declining stocks. Okay, so normally I tend to use, all right, the S&P ETF, the SPY at the top, all right, and then the ADD at the bottom. Okay, so you need to follow me closely now. Okay, so when the market started at 9:30 in the morning just now, right? Of course, it's 9:30 p.m. here, all right? Can you see the market? Of course, the market gap down. Very obvious, right? The market gap down, right? I'll try to zoom in just in case you cannot see. Let me try to zoom in better. Okay, so this is the SPY. So the market was kind of, hovering at the bottom, hovering at the bottom over here. Right? Can you see the market? It is, trying to test the low, trying to test the low here, trying to test the low here, right? But can you see that the advanced and declining lines over here? It is making a higher high. Can you see? Of course, it also dropped initially, all right, but then it is moving a higher high, and higher high. Okay, so this tells you that while the S&P on the surface, it is like looking very, very bearish. Okay, can you see over here? But the ADD is making a divergence. This is making a higher high. So it tells me that the broad market, it is not that weak for today. For today, it is not that weak for today. And I also look at some of my portfolio. Some of them are turning green. Okay, some of them are turning green. Of course, I'm holding some swing position, and I have to stop out today already. So it is very normal when market had a sudden correction. I got stop out also. That's why I say Alex is not always right. Alex is always wrong. So please don't copy me. But it tells me that today, this internally the broad market, it is not that weak. So next time, you want to see whether in the market, when they have a correction, you can use this, right, versus the SPY and the ADD, and comparing ADD. So if you are new here, right, I repeat, this is the ADD ticker over here. This is basically advanced and versus the declining issue, is the advanced versus declining stocks now. Okay, so I think I'm not sure how many of you have actually heard it the first time. If this is the first time you are hearing this, right, please type first in the comments so that at least I know you are learning something new. Okay, so normally I also don't don't really share this also when I check the market. Normally I don't really show this. So since the market is doing a correction, I am sharing you today. So yeah, I see first. Okay, so all right, good. So you can use this as a tool in your arsenal next time to see whether the market is stronger than it seems or weaker than it seems. Okay, and then I want to share with you. Let me also forget, I want to share with you. Okay. All right. So the market is actually rebounding right now in the way. Let me see ES. Okay, let me go through my naked chart over here. All right, so the market can see is forming this is the S&P futures over here. The market, it is actually forming a shadow right now. So market is kind of recovering at the moment. All right, so this is the naked chart. All right, for those who have been following me, you know that I use certain indicators to tell me the trend and to tell me the support as well. So I use the Ichimoku cloud to determine the trend. Just a benefit for those who are new to me. All right, can you see over here? Once the market recover during the COVID sell-off over here, right? Price has always been most of the time above the cloud. There was one time where it broke below the cloud, but there was a false break. But very fast, price just is always been staying above the cloud. All right, you can see that very clear-cut one. And then I also use this central pivot range to tell me the support and resistance over here. Okay, So you can see a lot of time, you know, when market tests the CPR, it is always a good time to buy. Over here, over here, over here, over here. The last time round, the last 2 weeks ago was here, so always a good time to buy. So using the central pivot range to tell me the support resistance zone, plus the cloud to tell me the trend. So if I add in everything, okay, if I add everything, it'll be something like this, okay. It looks very messy, but it is not, okay. Basically tell me the support also. All right, so but okay, even though like the Dow also recovering, okay, Dow is actually the sorry, it is the Nasdaq that is the stronger one. Can you see over here? Has been bulldozing all the way, right, all the way. Okay, but I think I mentioned before, even though the market previously was bulldozing all the way, rally up all the way, I was a bit wary of this market. Simply because I was also looking at the market breadth. All right, I'm using this site called the indexindicators.com. For those who have been following me, you should know already, but just for those who are new to me, all right, I'll post a link in the comments. All right, I use this thing to tell me the overall broad market, whether the health is okay or not, All right, so I use this thing called the breadth indicator, US, S&P percentage of stocks that's above the 50 days moving average. And I plot 2 years and I chart it. Okay, I know it is a bit small. I'll try to zoom in. I think when I was with Jay, I think last week, right, I mentioned that while the market was heading a new high, right, okay, but the broad market is actually not participating. The number of stocks that is above the 50-day moving average is actually declining. So at one point in time, you know, it was at about 40%. So can you imagine, right? The market, it is at an all-time high, but the rest of the S&P 500 stocks, only 40% are above their 50-day moving average. And 50-day moving average, you can treat it as a short to mid-term trend. If price is above the 50 days moving average, then you can say that it is on uptrend. And if price is below the 50 days moving average, you can deem it as a downtrend. Okay, so this is what a lot of technical traders and also some of the fund managers, they are watching this as well. Sometimes if you look at Bloomberg, they also show you the 50 days moving average, the 100 days moving average, and the 200 days moving average. So these are the commonly used MA that everyone is looking at. So that's why I say, I don't really like it because, market is going at a high, but the breadth is going at a low. All right. So if you look at the whole New York, let me see, the New York composite, basically the whole, all the stock that's listed in the New York Stock Exchange. All right. So I tried to go to 2 years also. I chart it. Okay, so it's also at a low also, not exactly at a high also. Okay, and one thing I want to take note is that, the Nasdaq composite is actually stagnating. It's like consolidating now. It's not moving to a new high. So let me go to this trading view. You can go to the ticker NYA. This is the Nasdaq composite. Basically, it is not the S&P 500. Basically, it's all the stocks that's listed on the New York Stock Exchange. Can you see? Can you see over here? All right. While the S&P is going for a new high, right? The Nasdaq, the New York composite index is stagnating, right? It is not moving higher. It's in a consolidation zone right now. You can see quite clear, right? While the S&P 500, it is continuing rallying. So it also tells me that broad market wise, it is not, the smaller company are not participating. So it is maybe a cause for concern for me. Okay, so I didn't really add in a lot of position as well. And right now I only have 2 swing trade position, and previously I got 4 so I was stop out 2 already, so only now left 2. So I didn't have a lot, you see. So that's the why I'm a bit cautious. All right, so what I want you to share it is also this. Previously, when I was with Jay, I also mentioned about this thing called the RSP. RSP is the equal weight S&P 500. Okay, of course, if you are in the market, you should know that the SPY is the standard S&P 500 ETF lah. But you know, this SPY is market weighted. For example, the Microsoft, the Apple, Google, they are heavily weighted on the S&P 500. Okay, while the RSP is equal weight, so every single stock is half, as in divided equally lah. So I use that as a ratio to see which is actually performing better, whether it's the smaller cap that's performing better or the bigger cap that's performing better. So you just bear with me for a while while I do the ratio over here as an RSP versus the SPY. All right. I remove the thing first. Normally for ratio chart, I tend to use the weekly time frame. All right. So can you see over here, this is the RSP versus the SPY ratio chart. It is actually moving in this trend line over here. And in the past recent 1, 2, 3, 4, 5, 6 weeks, all right, the RSP versus the SPY is actually heading down, which means that the smaller company are not performing well compared to the bigger cap company, which means, okay, in other words, the bigger cap company is outperforming the smaller cap company. So basically the big caps, recently the Facebook, Amazon, that's the reason why you see Facebook, Amazon, all these are performing much better. Oracle are performing much better. So that's the reason why the big cap are actually performing better, and the smaller cap, the mid cap, are not participating as well. From what I see over here, right, if we want to touch this trend line again, it might take another, I don't know, maybe 1 to 3 weeks again before we could see that potentially price could make a turn again, which means that it is kind of a rotation again where the smaller and the mid cap will start to outperform the big caps company again. Okay, do you guys get what I'm trying to say so far? If yes, if you understand, please type RSP in the comments. Okay, I know some of you guys don't know about this ETF, but for those who have been following me, I mentioned a few times. Okay, so you should know, right? So if you understand what I'm trying to say, please type RSP in the comments while I take a break. Okay, you understand what I'm trying to say, which means that right now the bigger cap are performing better than the rest of the market. That is the reason why, for example, Amazon had a breakout yesterday. Oracle, Facebook, all these are performing much better than some of the smaller cap company right now. All right. And right now, I also want to point you to this thing called the SPHB ETF, SPHB and SPLV, which I also mentioned before. In case you don't know, SPHB is referring to the high beta stocks, and SPLV, LV stands for low volatility, which is the lesser volatility stocks. Okay, so I mentioned before. All right, so this is the ETF.com SPHB. The high beta stocks, meaning that they tend to outperform the S&P 500. For example, if the S&P 500 move 1%, some of the high beta stock will move 1.5% or will go up 2%, 3%, that kind. All right. In the reverse is true for the low volatility stocks, right? LV. So if the S&P move 1%, the LV stocks maybe will move 0.5% and just lesser than 1%, okay, and such. All right. So some of these SPHB stocks, all right, high beta one, mostly are the growth stocks. All right, and let me see, where is it? Okay, mostly are the growth stocks and consumer cyclical, Occidental Petroleum, Enphase, Norwegian Cruise Line, Diamonds, and a smaller company one, okay, Divine Energy and such. Okay, later I will show you. So I just want to show you the ratio first. SPHB versus the SPLV. Right. So go to the weekly chart. Okay. So can you see at one glance, right? At one glance, this region over here, you should know that this is definitely heading higher. This is definitely heading higher, which means, all right, the market is favoring those high beta stocks, basically those high growth stocks. Later, I'll show you the components again for this high beta stock once again. All right, but right now, can you see that comparing to the ratio SPHB versus SPLV, all right, so this is actually coming down right now. So it is forming like a double top over here and is coming down over here, all right. So if we try to add in the cloud over here, you can see anything or not? Okay, so it's up here, but nevertheless, okay, it is still coming down. So if you want to change it to line view, all right, you also can do that in case, you know, candles doesn't make you very comfortable, right? You can see it's going up and then this is coming down. Okay, what I want to show you is that, you know, it seems that the market right now, it is favoring the low volatility stocks, and by the low volatility stocks, which means that it is favoring the defensive stocks, okay, defensive stocks. So SPLV over here. You guys follow me, I have a conclusion to make one. Okay, so try to follow me. Even if you don't understand, try to follow me first. So the SPLV, can you see over here? All right, the top 10 sector for this low volatility stocks is consumer, defensive, healthcare. All these are the defensive stocks, right? Consumer, staple, healthcare, and such, right? These two constitute a lot of weight already, about 50% already. All right, 50%. Consumer, staple, and healthcare. And for the SPHB, all right, it is the so-called the risk-off mode, like the consumer, cyclical, energy, financial. These are the high beta stocks, which means the market is potentially favoring the defensive stocks like consumer, staple, and the healthcare also. That's the reason why recently, you know, that XLV, the healthcare sector, it is pretty strong as well. I'm not sure whether you took notice or not. Okay, this is the XLV, this is the healthcare sector, right? Is it strong or not? Strong, right? On the market, you know, some of them while the market is coming down today, the healthcare sector, it is still okay. It is still pretty okay. It's still holding its fort. So, can you guys what I'm trying to say? Can you guys, if you understand, type yes in the comments once again. Okay? Type yes in the comments if you understand what I'm trying to say. And lastly, I want to compare, you know, growth versus value stocks. Value stocks. Okay, for the growth stocks, it is the ticker, it is IWF for growth stocks, and IWD is for value stocks. Okay, so F is for the growth versus the value stocks. I also mentioned that before. Just in case you don't know, this is also a ratio. All right. Okay, this one, the cloud will work better. All right. So initially, you know, the market, it is favoring the growth stocks. Very clear cut. After the COVID sell-off, the market, just like those tech stocks, the hyper growth stocks, it just went all the way until September last year, you know, where those tech company, you know, those growth company kind of have a standstill and, you know, not moving anywhere, and then there's a downtrend. And that's the reason why you can see over here, the IWF, the ratio is coming down, which means that the market is not favoring the growth stock. Until recently, you know, market kind of, it is holding well at the cloud support over here, and then it is heading higher again, which means that the market is once again favoring the growth stocks once more. All right, so I can use the line again to let you see, quite clear cut also. Initially, market favor growth stocks. Subsequently, you know, it's out of favor, and the value stock was in play. And right now, it seems that it's supported by the cloud once more. The growth stocks are resuming its trend again. So the market is once again favoring the growth stocks once more. All right. So after talking so much, talking about the RSP versus the SPY, talking about the high beta stock versus the low volatility stocks, and talking about the growth stock versus the value stocks. So these three. So what conclusion can you get from this at this moment in time? At this moment in time, do you guys have any ideas or not? Do you guys have any ideas what I'm talking about or not? So I go back to the RSP versus the RSP versus the SPY. If you have some idea, do share with me in the comments. So after talk so much, what's the conclusion you can get out of these three ratio? RSP versus SPY, SPHB high beta versus low volatility, IWF growth versus value. No answer, or you're too shy to answer already. Okay, step by step. This is my personal opinion. So right now, you have to be very selective of some of the stocks that you are choosing, because market, it is at a high, and it is not correcting a kind of meaningful pullback. Okay, sorry about that. I zig back to the S&P 500 again. I zig back to the S&P 500 again. This is the ES. All right, can you see over here now? You know, after there isn't a kind of a steep correction. It's just bulldozing all the way. All right. So over here, this correction is just 4%. Okay. And this correction over here in September last year, it is bigger, a steeper correction. The correction from top to low is about 10%. Still a meaningful pullback to me. All right. But right now, you know, in a broad scheme of thing, after the COVID sell-off, the market kind of just bulldozed all the way. All right. And there's a possibility, what I said, there's a possibility, I don't know. Okay, I don't know. But generally, I really prefer the market to have a steeper correction. I've said it for many weeks already, if you have been following me, but the market just doesn't want to have that kind of correction yet. So, you know, I still have to play some of the tricks, you know, because if I don't do that, you know, if the market just ran all the way, then you just go without me. Okay, you understand what I'm trying to say? But at the same time, I also don't want to overexpose myself by holding on too many positions. For example, swing trade, at most I will hold 5 positions right now. I won't hold like 7, 10, 15, that kind. So nowadays I only hold like three positions. That's all, only 3 to 4. That's all. So I'm quite worried that, you know, there's one time the market will suddenly do a pullback like this. So there's still chance that market can do something like this. Okay, can you see? This was the prior low over here. So the horizontal red line, right? So there's a chance that market can do like this. There's a chance that can do like this. We don't know. Right? Right now the market is recovering, but within the next few days, the market could do that. So we have to be prepared for that. So if from the high to this horizontal line here, actually the pullback also not very steep. Also, it's just 6% only. Okay, if we pull back to the trend line over here, it could be about 7%, 8%, 10%, that kind. Okay, so the market could do that, come here, or even do that. Okay, the market might not even want to do this and just hover around that and go higher again. It's possible. So whatever stocks that I want to choose now, I want to be really selective, because I'm also afraid that the market will suddenly correct. See, so I want to select the stocks that has the best chance, the best stocks or the strongest stocks that is currently the market wants right now. So as I mentioned, right, RSP versus the SPY. Okay, so there's still chance that the market might still favor the big stocks, maybe for at least 1, 2, I don't know, 3 weeks. So at this moment in time, all right, I would prefer to go for the I would prefer to go for the big cap company, if you want to. Okay, big cap for now. Okay, by the way, when I say I go for big cap, okay, just how to say, to tell first, my default trading position is swing trade, okay? Which means I hold for a few days to a few weeks. That's all, okay? I also do position trade as well, but that's another question. Okay, so basically, right now I'm talking about in terms of doing swing trade. If you're holding on for a short period of time, a few days to a few weeks, then you might want to hold on to big cap, all right? And then if you want to, right now, and I've talked about the high beta versus low volatility, right? So right now, you also want to go into the defensive stocks as low volatility, and also you want to go, possible if you want to try to go into the growth stocks also, okay? So there's a few ways that you can choose right now. Either you choose a big cap stocks, okay, that has a growth potential, all right, or you choose a big cap stock with low volatility. And big cap, they don't always go in hand with growth lah, so it is kind of difficult. So you can choose mix and match lah. So basically, you want these three: the big cap, the low volatility, and the growth stock at this moment in time. Do you guys get what I am trying to say now? These three factors are these three factors. Okay, so if you understand what I'm trying to say over here, please type the letter 3 in the comments. I would prefer to choose a big cap, low volatility stocks, basically the healthcare or the consumer staple or the growth stocks. If you understand what I'm trying to say, please type 3 in the comments. This is just my personal opinion. I could be wrong, but I would prefer these 3 kind of settings. Okay. Let me see some of the comments first. Why soon? You don't have long-term position. Okay, what you do with your millions in cash? I don't have millions. I only have billions. Okay, I'm just joking. Okay, I have long-term position. Ones is mainly for position trade, and I mostly do options. And the most recent one that I have is the XOP, which I've already exited. I think I mentioned before during I think Jay's session. I mentioned before I exited once already for XOP, and there are still a few positions I'm still holding on, which is longer term, which might hold until next year, January, because the options expire in January. And for example, uranium, I'm still holding on, so nothing much changed. But right now, I'm talking about right now the market situation around market. I don't know, market is a bit shaky. It could do a correction, it might not. So I'm not sure. I'll be honest with you, I don't know, but I don't really like the breath right now is that, the market, the smaller companies are not participating in this rally. So if you really want me to do a swing trade, maybe for the next few days or 1 to 2 weeks, if there is signal, I'll prefer to choose the big cap, the low volatility or the growth stocks. Okay. All right. James is asking, right? Conflicting signal, high beta is down versus, yeah. So that's why I say, you could choose a few of these factors, okay? Growth, low beta, or the big cap, up to you. You can just choose the big cap. For example, right now I have this position. I don't mind telling you, not all, okay? I have this Comcast. I'm holding on. It is big, right? It's a big cap, right? So while the market is tanking right now, it's not tanking as much as the whole index. So I think this is still pretty strong. So this is what I'm holding on to, Comcast. Okay, Comcast. So this is big cap to me, big cap. All right. So how we understand what I'm trying to say? All right. Eileen is asking, growth is equal to tech. Most of the time it is right now. Okay. Is there any growth that is not in tech one? Are you able to give you an example or not? Okay. I can't think of any now. Most of the time I think of a growth is equal to tech. Okay. So like for example, yesterday, Amazon, big cap. had a breakout. You see, while the market is tanking, all right, it is still quite strong today. You see, it is still a green candle today. So you see, it's big cap, it is growth. Of course, not as high as the smaller cap one, but it is still a relatively tech and growth company. It is still growing. So that's why I say, Amazon, you want to choose the bigger one. All right. So Facebook is doing okay. You see, Facebook is doing quite okay also. Okay, today not that okay lah, but previously it is still quite okay. It's holding on quite well. All right. As a low volatility stock, low beta, as I mentioned already, healthcare, okay, it is doing well. So you can check out all the healthcare stocks, consumer staple can check out also. So right now I'm talking about 43 minutes already. Okay, I'm a bit over time already. So okay with the broad market update so far. So just a recap. All right, for the breadth indicator wise, I am generally not that bullish. The market, it is not participating, so I still hesitate to enter really a lot more into my position for swing trade. So at most I'll enter a few trades, 1 to 2 position. That's all. So just be prepared for a bigger correction. This is the S&P 500. Just be prepared. The market can do like this. Okay, just be prepared. And for the Nasdaq, it is also chong all the way up. All right. So this is a weekly time frame chart. Just prepare. The market this week could stall like this, then next week come down again. So just be prepared. All right. Oh yes, Nike. Nike is a big cap. Is it a growth company? Today also very strong. Nike is a big cap. It's a growth company. It is still growing, but of course not as fast as the smaller cap company, but it is still growing. Okay, it's still growing. Okay, so good example over here. How to know it is big cap? So it is quite subjective. So to me, anything that is above 100 billion is considered quite big to me. Okay, or 50 B and above. Okay. 100 billion and above, 50, at least 50 B is considered big to me. 50 B is still okay, big, but not that big. So above 100 billion is considered big to me. All right. So today, the main thing I want to talk about today is actually this, how to trail your profits, right? How to trail profits. So how many of you have this experience? When you take profit, the market just chong all the way up. You don't take your profit, market just come down. Okay. If you have this kind of situation, right? Type yes in the comments. All right. Type yes in the comments if you have such encounter before. All right. You don't take profit, market come down. You take profit already, market just keep going up all the way. You have such encounter, type yes in the comments. Mary say yes. Yiling say yes and such. Yes, forever. Yes, right? I'll go through some of the past trade that I've done so far. Again, this happens to me once again. Okay, I trail, it come down. I don't trail, it just go up all the way. But taking profit can be more discretionary when you are already in good profits. Okay, so the previous Facebook Live, I mentioned that I was in retail, software, clean energy, and also cloud. MG I didn't enter. Okay, so let's go through some example over now. Maybe I'll go through clean energy. So this is a case study. Clean energy, ICLN over here. Okay. I don't know how many actually entered ICLN, but I did. Okay, I did. So can see the chart. I try to zoom as big as possible already. All right, so the previous time I mentioned that I entered at this yellow arrow over here. All right, so it is at the central pivot range, which I think that there's a chance that it could just go higher because above the central pivot range, I'm not so bearish, and overall on a weekly time frame, it is still on an uptrend. So I won't go deeper into how I enter the trade, but basically this is to tell you that I enter here. Okay, so my initial risk is somewhere around here. Okay, can you see the red line over here? I enter somewhere around here. All right. So I put my take profit target at R1 over here. R1 over here. I didn't trail. I didn't trail. So I think that, you know, if price could hit R1, maybe it's time for me to take profit already. So I put R1. Heng heng now. Okay, I'm lucky. Okay, price actually in my favor hit the R1 level. I take profit, and then subsequently it came down. Of course, today also. Of course, today is down day, so it gap down. So I didn't trail. I just hit my TP target and I just exited. So I think the risk to reward. So for example, if I risk 100, if I get back 100, the risk to reward is 1:1, right? So this is about 1:1 point, I think 1.3 to 1.5, somewhere around there lah. Okay. So yeah, understand what I'm trying to say, huh? All right. The other one is cloud computing. This one is the one I didn't trail, and then it just kept going higher and higher. Once again, you know, I entered somewhere around here, right? Because it's at the central pivot range, which I think is a good support over here. I enter around here. So my stop is somewhere at the low over here, and my TP target is at the R1 level over here. So after 1, 2, 3, 4, 5, 6, 7 days, it hit the level here and I exited. And after I exited, price just too young, just did it show all the way up. You see, I could trail for more, but I didn't trail. So that's why I say, you know, when you are taking profit is I mentioned before, taking profit is actually very difficult, very difficult. It is not that easy. Most of the time, right? I think maybe 80 to 90% of the time you regret your decision one. You know, as I said, you take profit already, price just kept going higher, and you said, yeah, I should have hold on to my position. If you don't take, price come down, then you say that, yeah, I should have sold my position earlier. So it's always the case. So taking profit is actually very, very difficult, but you have to be happy with your profit lah. So after I take my profit R1, you know, I'm happy, you know, just let it be lah. Let's just let it be. And the other one I mentioned, it is XRT, okay, XRT, you know, I tried to trail, okay, and then it come down, okay. Yeah, so initially I'm going to set price at about R1 level already. So I think which is also pretty good. So I enter at this orange bar over here, enter somewhere around here, risk somewhere around here. So about, if I exit around here, it will be about 1:1.5 risk to reward, okay. But, you know, I trail. So do you know how I trail or not? So for the PSJ, PSG, this is the software. All right, so I also entered somewhere around here. Okay, and then it came down, I trail. Okay, I trail. So I didn't set my TP at R1. Okay, so I trail also. So Guan, good question. How about taking partial profit 50%? All right, so it depends on your sizing also. Because recently, you know, I mentioned for many weeks already. So the market keep going up. I'm quite hesitant to place quite a big trade. So my sizing is actually not that big. So if I take partial profit, I can, but you know, it doesn't have meat, and also I have to pay brokerage also. Okay, so you know, in out I'm using CMC, the minimum at least $50 already. In out. I take partial profit, I have to pay brokerage once again. So recently I tend not to take partial profit because of my position not my per risk is about 200 to 300 only, so not that big. So I try not to take partial profit because I don't want to incur the commission. So this is my way of thinking now. Okay, you could take partial profit, no issue on that one. You can. Okay. So how many of you want to know how to trail your stop loss the easy way? Right? How many of you want to know? Okay. If you want to know, type yes in the comments. If you don't know, then I'll just end the session right now because it's already about 50 minutes already. You guys want to know or not? If yes, please type yes in the comments. Wow, I take a look at the market right now. Market is actually quite okay today lah. Okay, I mean that it's coming down, but not as bearish when it was open just now. Okay, the method is very simple. It is very simple. Okay, it is most of the time the people will say you trail once you are here already you can place at the low over here, place at low over here, place at low over here, or place at one time ATR. Right? If you know what I'm saying, that's good. If you don't know, it doesn't matter. So these are some of the common method people ask you to know. Place at the swing high, swing low. Place at the previous day low. Place at the the swing high, swing low again, basically, or based on ATR, based on the average true range. So the thing I want to share with you is very simple. Okay, this thing called the T line. T line. Okay, you can Google. Basically, it's the trigger line, and this is very simple, just using the AEMA. Okay, I repeat, AEMA. That is the trigger line. Trigger line. AEMA. Very simple. Okay, if you get what I mean already, just type AEMA in the comments. Trigger line, just type AEMA in the comments. I will show you the example over here. Okay, I will show you the not so nice example first. Okay, that is the XRT. Okay, XRT. Okay, trigger line over here. I'll remove everything first. Okay. Remove this. Try not to confuse you with so many things. Just remove everything first. Okay, just the 8 EMA over here. All right, so right? You can see my arrow over here, right? My arrow over here. So I enter here. I enter on this candle over here. All right. So initially, all right, your stop is somewhere around here, right? And price move in your favor. Right? So once price move, all right, at least 1:1. Basically, for example, you reach 100, you already get back 100 already, right? So somewhere around here, all right. Then you start to trail using the 8 EMA. Okay, when price break and close below the 8 EMA, you just exit. Simple as that. So based on this candle over here, so right now, my mouse is not that responsive. Okay, so my risk is here. Okay, my entry is here. 1:1 reward is somewhere around here. Okay, so once I'm in good profit already, I start to trail. I put 8 EMA. So you know when is the candle I need to exit. When price close, break and close below the 8 EMA, which is this candle over here. Can you see or not? This candle over here. Oh, sorry, my mouse is not that responsive to know why I try to exit some things over here. Okay, so XRT. All right. Can so I exited in this candle for XRT. Okay. Then PSJ, which I try to trail also. So I enter somewhere around here. This candle over here, risk to reward like this. Risk here, 1:1 is somewhere around here already. Okay, so I start to trail. I want to trail. Then you see, when I put the 8 EMA over here, price is still hovering around here until on this day it break below the 8 EMA. Okay, this is where I exit. So my risk to reward is about 1:1. So this is the so-called the disadvantage of using the 8 EMA to trail. Okay, you want to try to capture the profit, but you also need to let it have some room to run. So you cannot have the best of both worlds. Capture at the high and then take TP at the high and then exit at the high and then trail. So a bit difficult. Okay. Of course, there's nothing wrong. For example, if you exit here, you enter here, okay, and you want to exit here also. or you hit a pivot level, you want to exit. Okay, for example, right, you want to exit at this Camarilla H4 level, you hit here already, you want to exit, there's nothing wrong, it is fine one, okay? But if you think that, you know, you want to let your trade to go a bit higher and you think that there's some room to go higher, then you might want to trail. But of course, if price break below the 8 EMA, then you might want to get out, okay? So a very good example one using the 8 EMA one is using this cloud. I don't trail, then you just keep going higher, see? Always like that one, okay? Yeah. So as I mentioned, right, the pivot is somewhere around, yeah, pivot is somewhere around here. I enter somewhere around here. Okay. So 1:1 here, somewhere around here already. Okay. Can you see all the way? It just go up higher and higher, and never once for the many days, right? It break below the EMA. Touch, but it never close and break below the EMA. Near, but it didn't close below the EMA. All right. On this day, very close. All right. It hit. It didn't break and close below the EMA. On this day also, you know, it break below the EMA, but it didn't close below the EMA. It is still above the EMA. All right. So and continue to go higher. So this is a very nice kind of trend above the 8 EMA all the way. So this is a nice trading stock that you can use the EMA. And then for example, today it is the day, most likely I think it will close below the 8 EMA unless the market is so bullish by the end of today at about 4 a.m. then price close above okay. So you can stay put first. No need to be so controlled because you already have quite huge profit already. You get what I mean? You get what I mean? And the other one I want to mention is like, for example, like, crude oil. Crude oil also a very good example on this. Crude oil. Crude oil, remove the can pivot. All right. So let's say, for example, only, I didn't enter crude oil, but just an example only. So somewhere, maybe say someone enter somewhere around here, this bullish bar over here, and all the way, it will go up all the way. You can see, never once price tested this trigger line, the T line, 8 EMA, all the way. On this red day, price break below the 8 EMA, but at the end of the day, it reclaimed back. Okay, it is above the 8 EMA. So there's no selling. You still hold on to your position. On this day, open below the 8 EMA, but at the end of the day, it is still above the 8 EMA. All right. So can you see again on this day, testing the 8 EMA again, but it is still close above the 8 EMA until yesterday. Crude oil closed. Until 6th of June. 2 days ago, sorry, 3 days ago, based on current day, 3 days ago, price break below the 8 EMA. Then you exit your position. So from, let's say, for example, if you enter here and you trail until here, this is quite meaty already. There's a quite, I think the risk reward, I think maybe about 1, 2, should near 1 is to 2 or 1 is to 2.5. Okay. All right. Don't ask me, Marcus. Don't ask me why 8 and not other number. So I don't invent this myself. So if you look at this trigger line, T line 8 EMA. I first read it on one candlestick book by Deuce Bigelow. I don't know what, I forget his name already. He mentioned about T line, so I remember that. And actually, this T line is actually used by this guy called, I also forget his name already. Okay, Rick Sadler. So the birth of T line. He's kind of the first one to mention about T line. You can use T line to systematically enter and exit your position. All right. So T line. All right. So you can just Google. Let me see. some of the comments are. Weilun is asking, must cam at 345? No need to cam at 345 lah. Okay. Let's say for example, crude oil. If you are asleep, then just go and sleep. It doesn't matter. Okay. On this day close at below the T line already. Of course, if you are not asleep, you are at 4 a.m. still awake, then go ahead and close at 345. That kind, it is fine. But most people are sleeping already. I'm also sleeping already. So let's say this day close at below the T line EMA. Right. Next day, right? There's a few things you can do. Open, you just close. Okay. Or you have to wait for a while. If price tests the low again on this day, the low that it break below the T line over here, then you want to exit. So no hurry. You could just wait for the next day and close. Up to you. Once open, you want to close or wait for a few moments and then close. It is up to you. Would you place advance order for your 8 EMA? I don't understand what you are trying to say. All right. Frank is asking, if you hold long-term option, do you exit? Yes, Frank. Yes, I am holding to a few options position. I exit. So I normally don't pick up the stock. So before the options expire, then I will exit already. Yes. Exit the moment, close or next day. I think I answered your question already, right? Wrong. So there's no hurry. If you are sleeping at 4 a.m. already, then don't bother, right? Wait for the next day, open market, they can close. No hurry. All right. Eileen is asking how to set in the system. Okay, I think you are not very familiar with trading view, is it? So very simple. So you go to the indicator button over here. All right, you just search for EMA. Then you come out moving average exponential. All right, then on your trading view over here, you should see this EMA, then your number lah. So you can go to the gearbox icon, the settings. All right, then you just choose length 8. Simple as that. All right. Can it be set auto in TOS? TOS, what do you mean by auto? Auto as in closing the position or setting the T line? Okay, Shokwan, I think I also answered a question. Use trading view, this EMA thing is very, as moving average, it is widely known. Okay, so any charting platform should have the EMA and the simple moving average. So it depends on your charting platform, but for trading view, you could just go here, right, the settings and add in EMA. Okay. Gary said, I think she meant the trailing. Auto trailing on Think or Swing platform, I am not very sure. I didn't really use that kind of automation before. So I don't think I can answer your question. Okay, so Jess is asking how to add the ADD. All right, so let me show you how to add the ADD over here. So can you see this ADD template that I have over here? Okay, so let's just remove this ADD. Okay, so this ADD, it is not a indicator. This is a ticker. So you just go to the ticker box over here. You just search for ADD. All right, then you can see these are New York SE advanced minus decline line over here. Okay, it's ADD is over here, but you don't add over here. Okay, you just go to this compare or add symbol over here. All right, you just search for ADD again. You appear, and then you put on a new pane over here. All right, then by default it is line chart lah. So you can go to the ADD over here and then do your settings. You want to go into candles, and go into candle, whatever thing is. All right, they can do that. So I hope that answer your question. All right. Vora is asking about Tesla. What do you mean by Tesla? You need to go through stock. I don't think I will go through individual stocks today. I think we are exceeding the time already, more than one hour already. All right, so you guys, are you learning something new today once again? So I didn't really share this 8 EMA before, trading line before. Okay, so again, you could use this 8 EMA into your trading arsenal again, So if you want to trail, up to you. When you're in profit already, you can be a lot more discretionary. You want to take profit anytime you want, it is okay, All right, it is okay. So let me see this over here. Okay, when you're in profit, you can take any profit you want. But if you want to trail, once again, just do over here. This EMA over here, you can trail. Okay, so this is a very good example. I mean, this is a textbook example where trading, market is just climbing steadily, that kind. There's no pullback. Then this is the best way to trade. But of course, not all the time. Market will move in such a nice manner where you can trade a lot of profit, Like for example, the one I didn't trade. For example, the one I didn't trade, XRT. It is not so nice. It's not so nice. It went up and then do a pullback. Then I just exit over here. Okay, it's not moving so nice. And then, like for example, PSJ, I never trail, and then it do that kind of thing again. Goes up and then I exit somewhere around here. Okay, so it is quite systematically. So it kind of I think it's one of the simplest way for you to trail your profit, from what I know lah. Easier for you to use what ATR lah, swing high, swing low lah, that kind of thing lah. I think this is the most direct way and simple method, because on the chart itself you can see very simple, very direct. All right, and okay, good to see that most of you guys are learning from this session. All right, so okay, Z is asking, why not use the McLaren oscillator? Oh, you are testing my knowledge, okay. Yeah, I know McLaren oscillator. So yeah, there are many ways where you can see the market breadth, McLaren, advanced decline, percentage of stock moving above the moving averages and such. So there's just too many tools out there. But for me, I personally like to use this ADD and also percentage of stocks above the moving average. So these are the two main ones that I use. Okay, so McLaren, if you think it suits you, you can use as well. Like, don't stop it. You can use it if you want to. All right, this is just my personal preference. Okay, so Huma is asking, the shadow of the candle to be considered in making judgment. You mean for taking profit? Is it? All right, the candle. Not really lah. But one good hint that I want to tell you, that a good time for you to take profit it is when you can see that the price, it is very far away from the moving average, from the 8 EMA, the T line over here. Can you see initially it was still pretty near to the T line, but subsequently the kind of moving away from the moving average. There's a gap already. So in hindsight, I should have taken profit here lah. But you never know. But if you want to take profit here, it is never wrong, because price is quite far away from moving average already. Whereas for example, this cloud computing, you will see all the way, right, price is kind of hugging near the trigger line, so you can still hold on to it. All right. Again, for PSJ, which I entered using the recent example, price, it is kind of far from the moving average already. So again, in hindsight, I should have taken profit, but again, you never know. All right. So Humi is asking, the shadow of candle to be considered. No, I don't take into the shadow of the candle to shadow of a candle. Like the wicks, right? You mix. No. So for example, this PSJ, as long as price doesn't close below the trigger line, then I don't use it as into making judgment. So basically, just follow it. Price break and close below the 8 EMA, then you exit. Okay. By the way, this 8 EMA thing, this trigger line thing is more for, I would say, more suited for swing trading, meaning that you hold your trade for a few days to a few weeks. That's it for a few days to a few weeks. So this is mainly used for swing trading. So I have to set the context right first. All right. Ellen is asking, does it make sense to use 8 EMA with weekly chart if trading longer time frame? I never really back test it, but you make a good point. You could, but for this Rick Sadler, he's mainly using for intraday and for daily time frame. So I'm sticking to the intraday and for the daily time frame. So if you want to, you can just use the 8 EMA, use the 8 weekly EMA and test it out on your stocks and test it out basically. Okay. So I think we are exceeding more than 1 hour already. So thank you so much for staying with me. Before I go off, all right, just one more thing. All right. So please go ahead and register for this Market Insights Virtual Summit that's coming up, this coming weekend, just another day. Today is Friday already, right? So yeah, just next day is coming already. So weekend, all right? So do register. It is free. It is free. So I'll post the link in the comments. And also right now, I think it's a good time. Market is heading for a correction possibly, and it's good to see what are the market expert, the investor and traders are thinking about the market right now, and hear their market outlook, their trading strategies, and their trading knowledge as well. So a lot of exciting speakers out there, as I mentioned before already. The topics are pretty interesting. How to trade the commodities, super cycles, potential market opportunities. If you're trading options, 24 hours exclusive profits with corporate earnings. So there's a fireside chat with the keynote speakers, Michael Cobell, Tom Basso, and such. And of course, how to trade the trend, the easy way, using Boris method, that's the FX method. And Caden, we're talking about ETF and such. Macro-wise, you also have people talking about the macro. Kong Hao be talking about the Fed. Will the Fed bow down to the inflation? And if you're interested in cryptocurrencies, you can attend Jason's how to handle volatility in the cryptocurrencies market. Okay, so I think I don't want to hold you guys back already. So just go ahead and register for this event. And I also have quite a number of copies of this Trend Following Mindset book. You don't have to share the event. Basically, you just have to register for this event, attend the session, and you're entitled stand a chance to win this book. Okay, I make it very easy for you. Okay, so do register for this event. It is totally free. Okay, so just click on the register free button, fill in your name, email address, and mobile, and you are good to go. Remember to give me to check the email in your inbox. If it landed in your spam box, remember to put it in your main folder. Okay, and if you haven't give me a like, share, or comment, just give me a like. If you enjoy my sharing today, if you learn something new, just give me a like. And it also tells me that Facebook will also know the algorithm. In future, it will show you more of our Facebook Live in your Facebook feed. Okay, so just give me a like. Liking is free. So that's all for today. Thank you so much for tuning in. Today's a Thursday evening. So once again, have a good night, have a good rest, and I will see you guys on Saturday for the Market Insights Virtual Summit. Okay, thank you. Good night and 再见. Bye bye.